This is Chrissy Shorter-Arnold, CEO of Unveiled, the Chrissy Shorter-Arnold Show, streaming live on all social media platforms every Wednesday at 6 p.m. Check me out on my website, ChrissyShorterArnold.com. See you soon. See you soon. Welcome to Unveiled, the Chrissy Shorter-Arnold Show. We have a great show for you all today. At the onset, I want to tell you all, I get so many inboxes. I listened to a property on the other day, and there are so many more to come. My phone has been blowing up. My email has been blowing up. Listen, it's been ridiculous. So, this is the thing with me. I hate for people to miss opportunities like this. We're going to answer every question that we possibly can for you all today. That's why the show is titled, Let's Talk Real Estate. Let's talk about it. Let's kill the misconceptions. We're going to give you all good information. If you know this information will be beneficial for you, then certainly it will be beneficial for your friends, your cousins, your mother, anybody that you know that you're talking to that is interested in real estate. Now, we're just going to rock out. And we're just gonna have a good time with it. I don't even have any preset questions and all of that stuff. I just like to just rock out with it, okay? All right, so I want to guide you all to my website, ChrissyShorter-Arnold.com. All things Chrissy Shorter-Arnold. You all can actually keep up with me on my website. My social media handles. If you click on it, it'll take you directly to my social media. I have a lot of people saying, "Well, I missed the show because I didn't know which channel." Well, it's not on my regular page. Chrissy Shorter-Arnold is my regular page right here. But Unveiled is the page all on its own. And I want those of you who have not liked it to like it. Those of you who is not following it, please do so, okay? So yes, so my website is ChrissyShorter-Arnold.com. And you all probably notice I'm in a total different space. Look cool, don't I? So listen. Unbeknownst even to me, God having a way to work things out. After I had William share and I was talking, she said, "I like it better when you mention." She said, "That's next season. That is next season, darling." I'm trying different things in different studios so I can find my niche. Like, whenever we get into this, we don't always, stick to something we learn as we go. And so I'm loving the journey thus far. And guess what? I'm growing and I'm learning different spots. So yes, as you can see, new studio, new alert. And it looks good. So that's what I'm going to do today. Diversity. Do not be scared to explore in your talent. Your gift comes without repentance, okay? So do not be scared to explore in your talent. A lot of times people want to be stagnated because they're stuck in a spot and they're scared to move. That's not the case with me. I'm going to go where it is most beneficial, and I'm certainly going to grow where I think it. So I'm living in the studio. I've got a whole lot of different sets, so I'm going to be doing a whole lot of different things. And so, yes, I absolutely love it. So again, ChrissyShorter-Arnold.com. Now keep up with me. You can patronize the online store if you choose to. Those who have, I appreciate you all for patronizing the store. I really do. So again, you all can keep up with me. You can see my EPK. You can see the flyers. You can follow me on social media. We're even getting ready to put a link where you can click on that link and come directly to the podcast. Okay. So I'll keep you all abreast. And again, you all do know that the show will also be on Unveiled TV, which is my television channel on the Lit Television Network. So again, welcome. So today, listen, let me tell you who we have. We have Josie Johnson, who is a mortgage loan originator, a veteran mortgage advisor at Mac Home Mortgage. And so, listen, I like to deal with people that is in the know. I don't see one thing about it. I'm not gonna get all my information from Facebook. I'm not gonna get all my information from standing around the store. I'm not gonna get all my information from gossip. I'm gonna go back directly to the source. That's why I'm so successful with assisting my clients to actually actually close on them houses because I be knowing, once I see their credit, I know what I can accomplish, I know what I can get done, and I know that I can get them done within 30 days. So again, a realtor is only as good as their knowledge. I'm not coming for the other realtors, but I'm not gonna second guess myself for anybody because finances has been in my background and I've been preparing you all for years. But what I've done in those years as well is make relationships with the appropriate people to make sure that those people, to make sure that I'm in the proper knowledge so that I can pass that knowledge. People are draining their 401k and all their savings just to get in a house. Not so with me and my clients. Most of my clients have gotten in their house for less than $2,000, and that is down payment because I'm always going to structure it to the point where they can get approved with a zero down. I'm always going to structure it where I can try and negotiate those closing costs and do what needs to be done to lessen the amount that comes out of their pockets, okay? And then a lot of times at closing, they get back their earnings money deposit. I can't tell y'all specifically about any particular person's business. However, just speaking in general terms, I am skilled enough to make it advantageous for you to choose me as your realtor. Okay, so yes, we have Josie Johnson. We're getting ready to bring him on because we're getting ready to have a discussion. And listen, if you all have questions during this episode, please ask. Or we might inbox today and might start asking questions unless you're building on something that we talked about during the show. I don't like, like I said, I don't like when people not take advantage of opportunities like this. But we give you free knowledge. This is not a seminar where you have to pay for it, and people is paying good money to go to seminars such as this. With our people, and I'm just gonna be real with our folks and black folks, we don't want to pay for nothing. Everything is too expensive except for a pair of, y'all know what I'm trying to say, except for a pair of J's that you scared to walk in because you don't want to get no creases in them. Child, but anyway, honey, let me put this up here because we're getting ready. We're getting ready to bring on our guests. We're getting ready to bring on and we're getting ready to discuss something.
Hello.
Can you hear me?
I can hear you. Can you hear me?
I hear you. I hear you and I see you very well. So what's up, friend? How are you?
I'm doing great. I'm doing great this fine Wednesday. Had my birthday yesterday, so
I saw that. I said, oh goodness, I said it is his birthday. And then on top of that, he's gonna be on my show. So this is the
hey, you're having a great week so far.
Yes. So listen,
awesome.
I didn't even write down no questions. You know why? Because I like to be spontaneous. I like to make sure that we give the people the information, and I don't want us to hold back. So I've asked them, as you heard me, any questions that you have. Please come with it because there are so many misconceptions out here about home mortgages. I was talking to a client on today, right? I told her, I said, your scores are where they need to be to get a house. And she said, well, I want you to help me get 800. I said, ma'am, you got to have 25-year history. What the statistics show is that people with 800 credit scores and above have a limited credit history, and that's 10%. The credit limit is 10% of the credit score. See, people don't even know how to break down the credit score, but we want something. And I say at this point, that is admirable and an admirable score, but we can get done way less than that. I can get you approved at 640. 640 gonna do what 800 do at 850. And sometimes if you never built if you've never had a mortgage, then guess what? You build your credit by getting a mortgage. And your first house does not have to be,
home.
Rise.
Yeah, exactly. And that's something that I run to on a daily basis. Like, I work with a lot of first-time buyers. I'm like, hey, you need to get a property just to get your foot in the game. You know what I'm saying? Like, start this. This can be a start to your real estate portfolio. So what if you have to start out? I started out with a two one and a half townhouse, about 4 years ago. So start out with what you can. If you can only get approved for 100,000, 200,000, start with what you can get now and build up from there. That'll be your first investment property. And then go on from there. But it's better than paying rent to your landlord. At least it's something that you could call your own. You don't have to fight for painting the walls or mounting a TV or something like that. At least it's something that you can call your own. And yeah, I talk with a lot of people on a daily basis, and I have to let them know that, like, hey, this is not your forever home. This is just to get your feet wet. This is just to start. You know what I'm saying? And they start to understand that once we have those discussions. Yeah, you don't have to have the big mansion, the 10,000 square foot home. That's not yet. That's not yet. You know what I'm saying? But who's to say you can't get to that within the next 5 years, 10 years? You know what I'm saying? And now you have 10 properties on your belt to help you afford that home. You know what I'm saying? So, yeah, that's one.
Absolutely, absolutely, because that's why most people don't even get started because of that grandiose mindset. And
Yeah.
that grandiose mindset actually kills them from even becoming a homeowner.
Hmm.
Because we as people have to get out of that competition mindset.
Yeah.
We're so busy trying to get bigger and better because we see somebody else. And somebody got 2022, we want the 2023. And all of that. We really do have to do better because what we're doing is we're messing up. Like, okay, so during COVID, you the rates was historically low. And I
Right.
have come to me and say, well, I'm gonna wait till they go back down to 3%. I said, well, you'll be waiting to
Good
another
luck.
pandemic. You'll be dead and gone
Yep.
because
Freeze over.
historically low. That's
Yeah.
exactly what they meant.
Yep.
They meant that in our history, in our lifetime, we had never seen a pandemic.
Right.
And we had never seen it. So therefore, to keep the economy going,
Hmm.
they had to do all kind of stuff. They gave
Yeah.
stimulus. They did whatever they needed to do for you to put that money
Exactly.
into the economy. That's what it was for. It wasn't called Joe Biden cared about you and Trump cared about you. He didn't care anything about you. They
Yep.
cared about continuing to put money into the economy so that it worked.
Right.
No, and so and that's the thing. Even with that, those rates are not coming back.
Yeah. I tell people that again. That's another big thing that we discuss on conversations. Like, do you think right now is a good time to buy? Do you think I should wait till the market crash? Well, people don't know what a market crash is. That's just something that they heard down the road. Yes, that was historically low for a reason. Rates are never going to get like that again. 2%, 3%. That's long and gone. I'm sorry. So for those who are waiting for that, you're going to be waiting for a long time. And when people ask, is right now to good time to buy? Anytime is a good time to buy if you're paying rent. That's how I'm going to put on it. It doesn't matter if I quote you a 6% rate, 7% rate. If it's still something that you could call your own today, it's the right time to buy. For example, let's say someone locks their interest rate today at 7%. If rates get better, if something happens and we go back to a 3%, 4% market, boom, take that property, refinance, get that lower rate, get that lower payment. Let's say you get that 7% rate and rates go up. Somehow they go to the tens. Now you're good because you're locked in at that 7%. You know what I'm saying? So it's still an asset. It's still something that you can call your own and you can move with it. But if you can qualify today, take the rate that we give you, because this is what rates were before COVID even came. This is the rates we have today is a nice, steady, healthy market. And yeah, anytime is a good time to buy when you're paying rent, and and I'm keeping it as honest as possible.
The thing about it is, what's so funny is paying rent is the highest interest rate that you possibly can have because you're paying 100.
Exactly.
You pay 100% of something that is not going to belong to you, that is not yours, and that
Right.
you receive a phone call today where they're telling you they're raising the rent. And
Yep.
there's rules to this thing because a lot of times people say, well, I'm going to take them to court. Well, are you financially able to fight it? A lot of people that you all talking about you're going to sue, are you able financially to fight them? A lot of times we're renting from people that have very deep pockets and that have
Right.
connections in the community, even at
Hmm.
that. And so a lot of times people are not foolishly making decisions, just to be making decisions. They're making
Hmm.
decisions because they know they can get away with it. They
Exactly.
have a longer rental history
then a lot of times, so I tell people, so no, you put yourself in that position
Yep.
so that you can't control. That's a
Yep.
position that you cannot control. And let's talk about these interest rates because I have people, and I'm gonna just be real with you and be honest with you.
Oh yeah.
For the last 2 years, I've assisted going on 1,500 people become homeowners.
Mm-hmm.
With being credit master and doing credit and all of that stuff.
Yep.
So I've seen it from both ends, and I always meet like when me and you met, we changed the phone numbers immediately. You know why?
Yep.
Because you could be a great asset to me, and I could be a great asset to you. And I think
Right.
that people do utilize the connections like they should. And so now I
Mm-hmm.
can call you if I have a client that I feel like will best be suited with you as opposed to another bank. We have to have a library of different lenders and mortgage originators that we can call on and that we
Right.
have business with, to the benefit and of our clients, right?
Yep.
And so the thing is, you I see all these commercials are, even ads where they say they start financing people homes at 580. And I'm gonna be honest, I have not seen it yet. I've not seen one person get approved besides at the mobile home lot, with the
Right.
interest rate. And then that's the thing, a lot of them like to talk about interest rate, but when you get approved at the mobile home places. Now, I'm not gonna call no name because some of them I do refer people to if that's where they want to go. My
Right.
job is to assist you in the best I can. But this is the thing. Those rates are 22, 29, 27, 55. Those rates on those mobile homes are ridiculous.
It's
So if you
crazy.
want to buy a house at a 7% interest rate, but you want to buy a mobile home at a 29% interest rate.
Right. I don't even know how they
Now,
get by with that.
because I love them, but I've
Yeah.
yet to see. So can you explain to me about your different programs with these credit scores starting at the 580 or the lower score that you see that you may be able to get finances? Because I don't see that.
I got you. Yeah. And that's what I run into a lot. You'll see a lot of mortgage professionals, the commercials and everything saying, hey, 580 credit score, we could get you into a house. I'll be honest. I'm gonna keep it real. It's a marketing scheme. You know what I'm saying? Can it be done? Yes. Have I done it before? Yes. But it's a lot more behind the scenes that has to happen if you do come to a lender with a credit score, that low. You have to show strengths in other aspects in order for me or the underwriter to approve this mortgage. So if you're lacking with if you have a lower credit score of a 580, you need to have a super nice solid work history with whatever you're doing, whether that's self-employed or working, for long term with the business. And you have to have money in the bank. You have to make up for where you're lacking. You know what I'm saying? If someone comes in with good credit, we can find them down payment assistance. We can find them all that, we'll be real relaxed on how many jobs they receive. But if you come in with the opposite, if you have horrible credit, you have to show strengths in those other two. And 9 times out of 10, unfortunately, when I speak to borrowers that have 580 credit scores, they don't have $50,000 in the bank. You know what I'm
Exactly.
saying? And they're job hopping. They're trying to get their life together. So can you do a home with a 580 credit score? Absolutely, but you have to have all your other ducks in a row, and your interest rate is going to be nasty. Unfortunately, that's the cost of borrowing money with the lower credit score. You're pretty much telling the lender that, hey, I can't manage money for real, but let me buy a house. That's how we look at it on the lending side. Like, we'll still give you a chance, but it's gonna come at a cost.
I mean, and that's in a nutshell because
Yeah.
listen, and I tell them you are exactly right because most of the time when people come, whether it's credit score high or whether it's low, we're working with people that the first thing is, well, how much I got to put down, or then people don't understand that when buying a house, you got down payment,
Mm-hmm.
you got other fees such as surveys.
Mm-hmm.
Surveys make you pay for the appraisal up front.
Yep.
You have earnest money deposit,
Yep.
and then you have closing costs. So
Mm-hmm.
because you're asking for a zero down program does not mean that there's no other fees. It
Exactly.
is one less fee.
Correct.
I specialize with getting you approved for the zero down. So now we got that out of the way. But
Mm-hmm.
the lowest I've seen earnest money deposit would be is 1,000, and that's if the seller does not want that, they can negotiate. I had a
Right.
seller say, I don't want $1,000 for this price point. I want 2,500. I've seen builders say, I want my earnest money deposit 5,000.
Yep.
And that's good faith deposit. And so you got to have that as well. And so whenever, just like you said, whenever they see people that they consider to be risky, it's a whole bunch of stipulations that they want to put on the terms to make you prove that you are serious.
Exactly.
Because I will be honest with you, looking at a low credit score, I don't care how you want to frame it, I don't care who feelings I hurt, but on the banking side, you're considered to be irresponsible.
Correct.
And
100%.
you're considered to be trustworthy. So how am I going to trust you with $300,000 if you let a $300 Capital One card get you in this position? You want me to believe that you can pay a $3,000 mortgage, a $2,000 mortgage, a $1,500 mortgage, but I can look and tell you for $300 your minimum payment is $25.
Yep.
Yeah.
Yeah. Y'all got to make it make sense.
You got to make it make sense because it's not making sense. You making all this money, and so but you won't take $300, and you want me to treat you with this, and so you know, and that's what I try to get people to understand. You're not getting your credit, and I'm gonna say this: if you keep your credit good, then you got to get it fixed. I'm just being honest with you.
That's real.
We was not taught the importance of it. So that's why a lot of us is in a position. Not that we just, decided that we wasn't gonna pay bills. We were just gonna get people stuff and not pay it. It's just we're a product of our community. Our community was not taught that, and that's why I scream from the mountaintop. You're not learning about this for the benefit of Chrissy Shorter, because my credit benefits me, honey. You feel what I'm saying? You're learning about this, so that you can come to a Chrissy Shorter after you get your pre-approval from a Josie. You feel what I'm saying? When you go to him and you get approved, and then I'm gonna go find a house for you. That's what that is for your benefit. It's not benefiting the bank and the realtor more so than it's benefiting you. And I think that people also have that mindset. Well, I'm not gonna go to Chrissy, but baby, keep renting these.
That's it. I mean, keep your poison,
You understand? Yes. And so let's talk about people don't know the difference between conventional. They don't know the difference between FHA, and they don't know the difference between USDA. So can you tell us the difference between those, different loan types?
Yeah, of course. All right. So just to kick it off, so conventional and FHA, those are probably the most two popular loan products, specifically FHA. So FHA is backed by the government, which means it's a lot easier to get approved for. A lot of first-time buyers get approved for this mortgage because the qualifications are not as strict, So each mortgage product has a guideline that us as the lender has to abide by, and that, when we're doing your pre-approval, we make sure you have the right credit score, you have this income, you meet this debt to income ratio. The FHA loan is so popular because, one, that's the program where you can go down to a 580 credit score. So they're a little bit more relaxed on the credit score than the other mortgage products. And you can have what we call a higher debt to income ratio. And essentially what that is, real brief, a debt to income ratio is your monthly debts divided by your gross monthly income. It's a certain percentage that mortgage lenders calculate to make sure you can afford the home that you want to get, or you can afford the home. That's how we come up with your pre-approval amount is coming up. Debt to income ratio drives a huge part in that. And FHA financing is super popular because your debt to income ratio is the highest than any other mortgage product. And 9 times out of 10, when someone wants to purchase a home, I want to be approved for max. I want to get the max amount of house I can afford. So instead of me putting you in a USDA loan or conventional loan, I'm gonna take you FHA because I know you want to go to the very, very tippy top. And one keynote about that, you guys have to understand, when I'm calculating your income, when lenders are looking at your income, we're going by your gross amount. We don't know what you're bringing home. You know what I'm saying? We don't know all the other bills that you pay, light bills, utilities. That's one thing you guys have to understand is I can approve you for $500,000 home, but do you want a $4,000 mortgage payment? You know what I'm saying? Again, because we're gonna go by gross. You the one who needs to determine. Don't try to keep up with the Joneses. You know what I'm saying? You need to know what's comfortable for you and yours versus me approving you for max. You need to make sure you're comfortable with what you're paying when we give out that loan estimate. So FHA is very popular. One, because the low credit score. Two, because the debt to income ratio is higher. And three, your down payment is 3.5%. So the down payment is your skin in the game in order for the lender to finance the remainder. So 3.5% of the purchase price will be your down payment for that program. Now, conventional is another popular program. This is for a little bit higher credit scores. The bare minimum is 620. You'll see the guidelines say 620 if you go on Google, but I'll be honest. And if you're working with a lender, they'll tell you straight up, unless you have a 680 or better, chances are your file is not going to get approved for conventional, even though the guidelines state otherwise. We do have to run everything through a automatic underwriter approval, and it has to give us a green light in order to move forward. So those are for your higher credit score borrowers. It's a little, the difference between the two is conventional is cheaper over a 30-year span. You know what I'm saying? So after 30 years, what you paid in over time with fees and everything, conventional loan is a little bit cheaper that way. We do have programs where your down payment is 3%. So similar to FHA, your down payment will be, instead of 3.5%, it'll be 3%. Now, I do tell people, if they only qualify for an FHA loan, take that FHA loan. At least you're getting your foot in the door, and then refinance into a conventional loan once you got your credit, in a great position, and everything like that. Refinance and get into that conventional loan, and it'll be a little bit, cheaper for you over a 30-year span. And then we have what we call a USDA loan. This is very popular because the down payment on that is nothing. You don't have it's no down payment. It's a zero down payment program. And this is for rural development areas. So this is, you're not going to be within a city. The property has to qualify for USDA. So it's a website that we go to see if that property in question qualifies for USDA financing. So it has to be on the outskirts. And certain counties qualify if it's not dead in the city. But that's a great product because it's zero down. So it's not 3%, it's not 3.5%, it's no down payment. But the caveat to that is you do have to have a 640 or better for that program, and your debt to income ratio has to be really pretty low compared to FHA. Just a quick scenario: FHA debt to income max is 55%, USDA is 41%. So that's a big difference. So if I come to you and say, hey, you qualify for 250 going USDA, you might qualify for 350,000 going FHA. So it is a major difference between trying to qualify for USDA, and then of course for our veterans and active duty, we have what we call the VA loan, which is a payment is required. The government looks out for our the ones who served or are serving, and that is an awesome program as well because it's no down payment. So yeah, each program has their own qualifications. Of course, as someone like myself, it's our job to place you in that best product. We'll go over the pros and cons of each one, and we'll place you in the best product that makes sense for you and your household.
Okay, and let me tell you all a story about USDA. I know somebody was paying a USDA loan, and they decided to file bankrupt. Well, guess what? You cannot put USDA loans in a bankruptcy. You can't. You can't. So I tell people, listen. At the end of the day, get what you can afford, and make sure you don't overextend yourself because certain things there's no easy way out. And I don't want to teach that mindset. Even with me, a lot of times people will come and they'll ask me, well, you think I should file bankruptcy? And then I say, no, because I feel like for you, it's the easy way out. And yes, other races utilize it all the time. But for us, I will say this, but they get total liquidation. Our folks get repayment.
Yes.
So there's a big difference in between chapter 7 and chapter 13. Chapter 7, they all kinds of stuff. They get to keep houses, they get to keep one or two cars, they get to, keep their stuff. But the court will determine which chapter they allow you to file. So if you file in 13, you should just pay your bills anyway. And I'm saying because they put you on a payment plan, and the length of time, the max for your debt is not understanding, and you all can fact check me and research this as well. I didn't, I just know somebody who did it. I don't research that because guess what? I'm not filing bankrupt. But at the end of the day, I think it's like 54 months. So say for instance, your debt is 100,000. Now you divide $100,000 that they're allowing you to discharge by 54 months. If that's $1,500, $1,600, that money you got to pay every month. Go to the trustee, and then the trustee siphons it out and pay your debts. You should have just paid it
You
yourself.
just paid it yourself. Yeah.
You're going to have somebody else monitor you, and if you don't pay it, then guess what? Then you got to deal and be intertwined in the court system because you felt it would be best to go and get you somebody to pretty much babysit you and make sure that you pay your bills.
Right.
Now, so much for hollering, I'm grown, and then you run to somebody else for them to handle your business for you. And like I said, sometimes we get in situations because we are not well trained. So that's why I speak the way I speak boldly and just tell the truth and to make sense of it. You could have sat your behind down and you could have stayed out these people's stores and you could have disciplined yourself so that you don't put yourself in a position where somebody else gotta make you pay your bills.
Yeah.
You know, and so listen, that ain't cost y'all nothing, but it maybe hope somebody, as the old people say, maybe it hoped you.
Right. Right.
Serious, maybe it hoped you because a lot of times we look at, I have to, and I get it all the time, and that's why I'm commenting on it. I get it all the time. Do you think I don't never think you should file bankrupt? What I think you should do is sit down.
Mm-hmm.
And hey, you know, because half of them people that ask me that, if I go in their closet, it's full of $300 and $400 shoes. It's full of Gucci, Louis Vuitton, whether it's real or fake. It's all of that in their closet, and some of them have that too. And some folks will have an audacity to go to the bankruptcy court with that purse. That's what I'm saying. Like we don't
That's
even
crazy.
think about the way that the courts look at it. We don't
Yeah.
think about that kind of stuff. But you're walking in front of these people and you're telling them that you can't pay your bills, but your attire is more expensive than mine.
Yep.
And let me tell y'all this as well. They look at you all, the women, they look at y'all when y'all go for child support court as well. And they say, well, you came up in here wearing pretty Louis Vuittons, but you're telling me you need help with the children. Now, granted, I'm not giving nobody no pass. I'm saying that, yes, men should be taking care of their kids without the court telling them. I'm just telling how you are perceived, you know, by the courts and what their conversations is. You're banking on somebody to make a ruling to make the man that you chose to have children with pay child support, but you're going in there and you don't look needed. You look like and excuse my French, but let me just be real. You look like the richest bitch in the courtroom. And that was your whole point. To go in there and look like the richest bitch in the courtroom, but you saying you need assistance. It don't add up and it don't make sense.
Make it make sense.
Let me not go off on that, but let me say this. I saw a question that Lachey Leaks. She's asked, she said, how long how soon should you think about refinancing your house after you get it?
Okay, so refinancing, normally after 6 months you have the opportunity, but we are going to look at a few things. I would say refinance when it makes sense. Everything comes down to if it makes sense. So one, if you got your credit great, in a great position, take advantage. If interest rates make sense. If you have a 7% and you go to 6.5%, that don't make sense. If you go from a 7% to a 5 or 4%, that makes sense. You're going to save you $200 to $300 on your mortgage payment. Refinance then. If your house has a ton of equity in it, refinance. You purchase your house today, now they build a Publix, a shopping center, a Chick-fil-A down the street, and now your equity is shooting up like a mug. Refinance in that aspect, and pull some money out of the equity and, do renovations to the house, pay off debt, do whatever in that aspect. But do it whenever it makes sense. But normally after 6 months, after you purchase your home, you're good to go. But I'll say once your credit is great, once it makes sense in the market, and if you have some sweet equity in your home, that's when I would advise to refinance.
Now tell me what you think of this, because I always advise my clients. Now, I've been getting a lot of my clients approved for it's a zero down, but it's 20-year mortgage. Mm-hmm. And I'm gonna tell you what I tell them. I tell them, listen, I have an insurance company that I can refer you to put asset protection plan on your house. Basically, a gap insurance policy. You know how we get gap on our cars. Okay, so when you die, this house will be paid for credit life. or what we want to call it. Okay, so I'm not going to pay off none of my houses.
Yeah.
When I'm dead, the insurance can pay it off. What I'm gonna do is use my money to live with, and I'm gonna have, and when you see me in nice things, you know it's paid for. And I'm
Yep.
gonna take trips, and I'm gonna do all of that. And because I'm gonna be, I mean, at the end of the day, I'm gonna be dead. However, I'm not leaving you in any debt. You understand?
Exactly.
That I paid while I was alive, you will not pay when I'm dead because I
Yep.
had sense enough to get insurance on it. So my
Yep.
thing, what I've been telling the people is this is zero down. Let me negotiate your closing costs. Let me
Yep.
get you in this house, for lease money out your pocket,
Yep.
refinance it to 30-year mortgage. Your
Yep.
payment will go down a couple $100. Put
Yep.
asset protection on that 30-year mortgage. When you die, it will be paid for. You can leave it to your kids. So
Yep.
does that make sense to you?
100%.
Right.
That makes sense 100%. And let's touch on that protection. Our people, we tend to not do that. You know what I'm saying? You'll see it every day. Someone pass away, grandma, mama pass away, the siblings fighting for the house. I deal with that junk every day. The siblings fighting for the house, they about to sell it, they can't keep up. We even though it's not mortgage related, that is something that we need to look into. Asset protection, life insurance, so when we pass, that house is taken care of, is paid in full. Now you pass it on an asset to your children that they don't owe a dollar on. Instead of them going to have to fight with their siblings and sell it and start a GoFundMe and all of this foolishness. That's something that we need to take a little bit more serious for sure.
Yes.
Asset protection, yeah.
And let me say this because I deal with a plethora of issues. You understand? It's credit straight. Lord have mercy.
I'm good.
Stop advertising for credit repair because I got
Yeah.
so much other stuff going on, and I'm like, this stuff is starting to get on my nerve, to be honest with you, because I've been doing it consistently for like 2.5 years, and so I'm always on social media. I'm always giving out points. I'm always putting out statuses. I'm always like that, and I hate to feel like I'm not being heard. But I'm
Yeah.
also like this. People that's in these relationships, long-term relationships, and I know I'm gonna step on some toes, but I get it all the time. I get where people are in relationships and they're not necessarily married, and they ask me, "Do you think we should go on along together?" I said, "Well, why wouldn't you? You share your good goods with them." I mean, your most. I'm just you don't.
Hey, it's real.
I'm drawing uncut. Listen. So I'm like, you're giving them the best part of you. A house is not the best part of you. You understand?
Right.
You're giving them the best part of you. Something you can't take back. You can get a house, lose a house, get a house, lose a house. It is what it is. But my thing is this: yes, for income purposes, your household income, you will get approved for more house.
Yeah.
If both incomes are there.
Correct.
Some programs does not require both to be at a certain number. I utilize the program a lot that the highest score is the one that they're gonna use.
Mm-hmm.
Because the woman may be concerned with her credit and the man may not be concerned with his credit.
Yep.
You understand? And in most relationships, the truth be told, it is the woman that is always concerned with the finances. The man just wants, make the money and spend it like you want to, and this, that, and the third. But buying a house is a big deal. But also being in these relationships is a big deal. Why be with somebody who is not going to facilitate? He's going to keep you subservient to rent.
Yep.
You're going to put in a position where y'all money is not going to be beneficial. Like if something happened after paying a mortgage 10 years, you got 10 years of equity in that home. You can take out a home equity. It may bail you out of a hellified situation.
Yep.
You could never do that renting.
That's true.
You can go get, if you got asset protection on the house, right? Like we just said, and you got $100,000 worth of equity in it, go and get it. It'll be paid for when you die.
Yep.
And it could bail you out of situations. You know how many people is filing bankruptcy and got equity in their homes, and the equity it could have bailed them out of their financial situation.
100%.
People get their houses foreclosed on, and they got equity in it, all because they're not in a position to refinance. Want to know why? Because their credit not good.
Yep. People don't know how powerful that is. And for those of you who do not know what equity is, just a quick scenario. Let's say you buy a house today. We close on your home, $250,000. Let's fast forward 5 years. That same house, the property that you're living in for 5 years, that same house is now worth 300,000, 310,000. You essentially have $60,000 in equity. I tell people that is a bank account. You have an emergency bank account that you could tap into if worse come to worse for whatever reason. You can, that is yours. That is your equity that you built over those years for your home. And that's why real estate is the strongest investment, because a lot of wealthy people will take that equity. They don't worry about paying off a mortgage. They're gonna take that equity, use that as a down payment, buy a duplex. You know what I'm saying? Buy a quadplex, buy a commercial building, and they keep cycling it out through all the buildings, and that's how they keep up. That's how they build wealth. Every wealthy person, if you ask them what they do outside of their company or what they do on their 9 to 5, they're gonna say, "Oh, I invest in real estate." You know, it's not. It's so that's essentially what equity is, and that's why equity is. That's why it's so important. That's why we touch on that so much. But yes, it can. I was helping a couple the other day in a ton amount of debt, a ton of debt. And I was like, why not? Trying to advise them. I was like, you purchased this home 15 years ago. Do you know what your home is worth now? You have over $150,000 worth of equity. Let's take out this cash and let's get your life back together. You know what I'm saying? And it saves people lives sometimes. It saves their marriages. Again, it's an asset. Buying real estate is an asset. And we have to start realizing that. Of course, that's why education is so important. Doing stuff like this is so important, so we can spread that knowledge, something that we got on that, pretty late in the game, but now that we're on it, we got to get everybody on the same page.
Right. And so you touched on something I want to touch on. Let's talk about the multifamily properties. People think that you can buy a duplex, and even before you move in, you can utilize the income that it could potentially generate to help you get approval for that property.
Yep. Yep. What she was referring to, y'all, is what we call house hacking. House hacking is a very cool, dope product. You know what I'm saying? You can buy a multifamily, a 2 to 4 unit property as your first home. As long as you use it as your primary residence, you can use FHA financing, 3.5% down on a 4-unit property. You know what I'm saying? And to qualify for that property, we can go based off, as long as you agree to live in 1 unit, we can go off the other 3 units and use that income to help you qualify. Whether the house has current tenants or not, we can use the market rent. Let's say you bring home, $5,000-$6,000 a month, and then each unit, we know you can get $1,000 a month for each unit. That's an additional $3,000. We can help plug it into your income. Now you qualify for a multi-unit with only putting 3.5% down after sellers for some closing costs, or pair that up with down payment, first time buyer assistance. Now you got in the property with zero. Now you have your first investment property with $0. It's the perfect transaction if you qualify. Now you're a landlord. Now you're an investor. You're a homeowner. You checked all the boxes at once. You know what I'm saying? And that's a really dope tool when it comes to real estate finances. You can do certain things like that.
But see, and they think I just be talking. That's why the income taxes and stuff like that is important.
Yes.
It's not stun time. It's time to put it aside so that it can bring you in more income. And see, when we start talking about 3% on that's $3,000 on every $100,000. That you have to bring to the table, and you may have to. It's good if a realtor and mortgage originator can assist you with getting around those fees, but that's not always possible.
Yeah.
So if it's not always possible, then why spend money frivolously when you utilize that money to bring in more money, to bring in more income, to bring in, because I have people that ask me about townhouses and I send them, but current tenants is in it, and what they have to understand is this: the lease trumps the purchase. What I mean by that is you can buy all day long, but you can't keep them tenants out until their lease is up.
That's true.
So what happens is, in most of those deals, what the goal is to find out how much that tenant paying, and then when the lease is up. So if you're looking to go and occupy a townhouse that has a lease to 2024, go on about your business. If you're trying to live in just this townhouse, you understand? No, you want to like you say, a multi-unit property to live in or whatever, and you can do that at times. I'm just educating you all. If there's a tenant in there and you're looking for somewhere to stay, then that tenant can stay until their lease is up. You don't have to renew that lease but you can't kick them out. So, and that's law. So, so just
That's
know that.
a whole nother ball game.
Yes, that's a whole nother ball game. I tell you. Okay. And Leah Marshall going to know, say, is there a right time to pull equity, or when is too early?
When it's the right time or too early to pull equity. Again,
Yeah.
if you pull equity when it's beneficial for you, you know what I'm saying. If you want to use that money to, make sure it makes sense. It's all about a dollar. So if it's to do renovations on the home, that's going to make your value go up. Do that. If it's paying off a whole bunch of consumer debt where you can save monthly by paying all of that stuff off, and it's going to shoot your credit score up. That's an example of I would pull equity in that aspect. Or again, if you want to get started in real estate, that's how I purchased my first investment. I took the equity, I did a cash out refinance or HELOC, and took the money that I gained over the 3 years in equity of buying my little townhouse, and I used that as a down payment to buy a 4-bedroom, two bath, and put it on Section 8. You use that as your down payment. Now that's making more money. So again, I will pull equity when it makes sense, or when you have a valid reason to tap into it. Again, it's still in the background. You don't have to tap it immediately. Let it continue to grow. It's a savings account. You know what I'm saying? So let it build until you come up with the game plan. Like, hey, I want to buy something else, or I want to pay something off, or I want to, college fund for my children. Whatever your personal goals are, just know that you have that as a resource. When it's there, or it's there.
Okay, we got to pause for a minute. We're gonna do a PSA, mental health PSA, and I'll be back with you shortly.
Okay.
My son, Montoya Francis, committed suicide March 2nd, 2021. Please reach out for help.
Suicide affects everyone, family, friends, and veterans. Please get help.
As someone who once attempted suicide, I know there is help available.
Suicide is preventable. Please get help.
Please call Big Ben 211.
Okay, so I always run my PSA. I had that PSA made in Quincy after a couple of suicides, and I'm a 6-time survivor myself. I done tried it 6 times, and thank God he did better than me. So, and a lot of this stuff that I'm talking about, guess what? I had to deal with it. I had to deal with it to get through it, and I couldn't run from it. And so when I say certain things, I'm not trying to be funny or whatever, but even our credit issues, we got to deal with it. Our financial issues, we have to deal with it. There's a lot of people that has committed suicide behind things that we just should have dealt with and moved on. Because a lot of stuff we just really don't have to do. We put ourselves in a whole lot of debt, and we put ourselves in a whole lot of disadvantageous position, and we just don't have to do it. The truth is, with a little bit of discipline, we can alleviate a lot of stress that we put upon ourselves. So I just want to be clear. If you are anyone is suffering from mental health issues, please get help. Okay? All right. So, and one more thing before we continue the conversation. In my Black Excellence segment, I just want to acknowledge that today is International Women's Day. It's Women's History Month. So you are looking at a woman. You understand that it's making history, has defied the odds of the things. I don't look nothing like what I've been through. And when people hear a lot of stuff that I've been through, they be like, huh? Yes, that's what built me and made me today. I think I'm 44 or 45. I don't even know how old I am. But I'm telling you, I had some hard years, and it was not because of nobody but myself. It was about the decisions that I made, and it was about the things that I allowed. And so I chose to deal with it, to deal with it. And guess what? Dealing with it is not easy. I'm not saying that like it's just easy. It's not easy, you all. But sometimes we have to reach outside of our community. Sometimes we have to reach outside our household. Sometimes we have to reach outside our family and get the help that we need. Sometimes we need a person that is objective, that don't have anything to gain, and that is not going to be biased in one aspect or the other. We need somebody to just tell us the truth. Because a lot of times we surround ourselves with people that tell us what we want to hear. And we can't talk to people that are going to be straight up with us. But we have to normalize only calling people friends that really truly have your best interest at heart. And a person that have your best interest at heart is a person that's going to tell you what you need to know and not what you want to hear.
Right.
Okay? So we can alleviate a whole lot of stress. Listen, I think at this point in my life, I'm pissing off a whole lot of people because things that I once tolerated, I don't tolerate anymore. I don't think I'm perfect. I just know that I'm better than the things that I allowed in the past, and I'm better than the things that I did in the past. And the cycles will not break if we don't break them.
Yep.
Cycles break on their own. We have to break them. So even in our finances, even as renters, even as us thinking that we're not in a position to financially impact our community, our families, we are. Okay? So that's my little preaching section for today for my mental health aspect. The mental health, I'm always going to do that. The conversation is good, but we had to break for the mental health portion. Okay?
Love it.
Yes. Okay. So listen, this has been going fast and it's been going good. And I don't even think you introduce yourself and tell the people who you work for, how they can get in contact with you on social media. We just jump right in.
We did. We did. Well, yeah, guys. So, my name is Joseph Johnson, also known as Joe the MLO on all social media platforms. I'm a licensed mortgage loan originator in the state of Florida, Georgia, and Texas currently. I work for Annie Mac Home Mortgage. We're licensed in pretty much all the states. So if you do want to connect with myself, whether it's the states I'm licensed in or any other additional states, I'll be happy to assist. Again, my job in the process is to help you get qualified for a home, whether it's your first home, second home, investment property. I have the resources and the connections under my belt to make that happen for you. Um, so yeah, please follow me on social media. I make a lot of great mortgage content weekly that drops. And that's what I love to do. I love to educate again because this is something that we didn't know. A lot of people don't know the process of buying a home. They don't know where to start. You know what I'm saying? It's nothing that is taught in school. It's not taught in college, high school, or college. So um, I try to make it my duty to deliver to my people and kind of put us on game again because we're late to the process. So that's a little bit about myself, you guys. Again, if you're looking to start the home buying process or have any specific home ownership questions, want to go over your specific scenario, please connect with me, Facebook, Instagram, Joseph Johnson or Joe the MLO, and happy to help anybody I can.
Great. See, we probably could have did that at the beginning, but nevertheless, and you and I met at a seminar.
Yep.
We had a seminar, and my understanding, Erica been calling me. Look like we finna get ready to be in the Leon County school system,
Yep.
and this is one of these huge churches over in Tallahassee, and so we're on a team together, y'all.
Yep.
We're talking about credit, and we're doing just this to people that when we had the seminar, I tell you, it aggravates me so bad that when we have stuff like that again, the knowledge is there. So I don't like it when people say, well, nobody taught me. No, because we are advertising and we are putting out this information.
Yep.
But you don't think $10 is good enough to pay for information. And I didn't say it did up, but people setting up events, y'all know people are renting spaces. People
Yep.
are renting teachers. People are providing refreshment, all to get information to you that folks won't utilize. You
Yep.
understand? It's crazy. And
Yep.
even this, a lot of people will go and watch the show afterwards. I have a whole bunch of people, Facebook give me the insights. That's what we want to see. How many people it reached and how many people, clicked in this, that, and the third. So a lot of people won't sit down to watch it. At the end of the day, it's going to stay on Facebook so that they can, and so we get, a whole bunch of views. But my thing is this: sit down, sit the time, aside where you can get this type of stuff. Because
Right.
guess what? People that don't look like us is paying thousands of dollars at seminars. People are flying across the world
Yep.
to get the information that we give you all free or
Mhm.
a little change, and folks want to take advantage of it. And then the first thing we say, nobody taught us. Well, it ain't because we're not trying, because we are.
Yep.
I'm telling you, I'm physically not in Quincy, but I do a whole lot to benefit Quincy.
Hmm.
And y'all can credit that to the God in me, because a lot of times who want to go and fool around with jealous and envious people? Who want to do that? Don't nobody have time for that. So, you know, and let me tell y'all, I'm not telling your age, but what you 29, I always saying telling it. But the point is, this is so magnificent that you are a black man. You are a young black man. And you are very positive. These images are not being depicted on the news. You are in a position where not only can you tell them about becoming a homeowner, but you are, and you can share your personal testimony with them, but you are in a position to assist them with it. And we need to talk about it. And we need to illuminate on that. And we need to show up. We need to ensure that black men like you that is in such a position
100%.
is highlighted. And so that's why I said your age for content, because you didn't get 60 years old and then now you're just trying to teach and not just trying to put out the information or just in the position where you're seeking for, you know, your dreams. You're doing it now. And again, we don't see this. We think that the only successful black people is the one playing football, basketball, hockey, you know, sports.
Exactly.
That's the only are the ones that's raping. That's why everybody wants to get rapper.
Right.
What have to come to a realtor to buy a house, and the rapper has to go to a mortgage loan originator to get approved, because most of them not paying for cash. Because when they have those $1 million contract, they ain't writing them no check for no $40 million and giving it to them. That's rationed out based on their contract, how they play in the game, and each game they give a check. You understand? So people don't even understand it, and these misconceptions have us thinking that success cannot be attained, and you're trying to fearful of it.
I appreciate that. Thank you so much.
Listen, most definitely. And I'm telling you, when I saw you and I saw that 5.0, my honey been on me. My honey said, I want, listen, he had 2 5.0 when he was in school. He don't want no Mustang.
Hey, yeah.
Listen, he want I've been looking for him in Shelby, Cobra, or whatever.
Yeah, I gotta have that.
And this thing is like $150,000.
I know.
And I said, David, you want to pay that for a Mustang? And he said,
I know.
You have Bentley, don't you pay what you? He said, okay. And I said, well, you know, at the end of the day, we gonna make sure you get it. But yes,
right.
See, that says you jumping up out that big boy. You understand? This ain't one of them things with that little Mustang on the 4-cylinder.
Right.
Listen, because I will talk about a 4-cylinder. You hear me? Yes, God. So yes, okay. So before we end the show today, is there any other information, any other points, any other jewel, any other because I'm gonna be calling on your course. You know, I have a large database of people that is in the homebound process. I got 4 closings on Friday.
I love it.
I'm trying to tell you. So, you know, and then every week, subsequent week, I have, I think, 2 the next week, 2 the next week, you know, every day in March. And then to be honest with me, before the end of March, I'm at a little bit over 3 million in sales, and that's a whole hell of a lot in our area when the houses are $200,000 and all of that. And so, and when you compare me to the stats, and they're like, yeah, I became a realtor in October, but I didn't come to finances in October. I didn't come to get the people approved in October. And just and since October, you know, I'll be at about 6 million. And so we have realtors, they're like, Chrissy, what you're doing is not normal. So y'all can keep on sitting around.
Yep.
Trying to compare folks with me.
Yep.
You understand? Keep right on. I got the connections, and I bring y'all all the connections. I had another mortgage originator at the seminar that I had. So all of my connections, I'm bringing them on all of my platforms so that I can ensure that benefit. And like I said, I know that you and I is in a group where we're actually going to be at the Leon County Schools and once a month at the church. From my understanding, they called me, you know, asked me would I be a part of the team. I said, as long as it's the last team you had, then yes.
Let's do it. Let's do it.
It's been a great, amazing show. I didn't see many questions. I'm looking back through to see if I can see some questions before I let you go.
And one tip I would say is, guys, do not be afraid. All the resources are here. No question is a dumb question, especially when it comes to something as serious as this. So don't hesitate. Reach out to myself. Reach out to Chrissy. Let us know your questions. Let us know your concerns. You have the team. You have the whole team behind you. You know, you have the real estate agent. You have the credit repair. You have the lender. Use us. You know, use us. That's what we're here for. That's what we do. Every day, all day. That's what we eat, sleep, and breathe. So don't be afraid to reach out. Let's close the home ownership gap for minorities, and let's make it happen. You know, and stop trying to keep up with the Joneses. Stop buying all the cars and all the shoes. You can get to that later. Get some properties under your belt, get some assets, get some real estate, then ball out. But then you can say, hey, I own five, six properties, as well as have a Lamborghini and all this other stuff. You know what I'm saying? So we got to start prioritizing what's important. You know what I'm saying? We got to prioritize. You don't have to have every Jordan that comes out. So yeah.
And that's what I always ask my clients, I said, what is your goal? Some of them don't want to buy a house. So if you want to buy a house, then I'm going to make sure to assist you with getting a car with a good deal. And not just getting a car. I want to make sure that I don't believe in down payments. And I still don't believe in interest rate. I don't believe in that. Because if the bank won't finance you, they're going to finance you. Now, you can listen to the deal all you want to. But normally when they finance you, what you need to be asking is, what is the LTV on this loan? And most of the salesmen, you can't tell you because they don't know. They don't know. But you get your finance manager to tell you what the LTV is on that loan.
Right.
I don't like LTVs that is 110% or 125% because that means that it's going to be that much more depreciation. No, I want to pay 100% of what this car is value. I don't want to.
You don't want to start upside down.
The loans are value. So I try to educate my people, even if I'm not assisting with buying cars, because people say, well, Chrissy, you was helping them get cars. Those were people that told me they didn't want houses. The people that told me they wanted houses, guess what? I got them pre-approved and sent them to other realtors before I became a realtor.
Right.
So no, we're not playing that game. I have to educate you on every front to make sure that you're making the correct decision. And like I say, when I go to college, I'm here on wheels because I know so much, and I just don't try it with me. Don't even try it. I don't put down no money on no cars.
I'm telling you.
I don't do that because I go down the road and wreck it, and then gap insurance gonna pay it off, and I could have kept my money in my pocket.
Exactly. Keep every penny as much as you can in your pocket. So I know that's right.
It's so much knowledge, and 1 hour is not gonna do it.
I know.
Because we're gonna continue to do this. I'm supposed to be putting this big seminar together. I had one in Quincy before. I don't know that it's gonna be in Quincy, but I have some heavy hitters that has reached out to me. Of course, you'll be there as well. And like I said, I love the fact that the representation of our people is right there. We don't have to look any further.
Yep.
You know your job, and you know how to get people proven. You can do what any other loan officer can do. You know, it's not better. So we're definitely gonna pull on you. We're definitely gonna utilize you. So get ready. Get ready.
Let's do it. I love it. I love it for my people. So thank you again for having me.
I see Mike on here. He's my boss. You know, at the Lit Television Network, he always tunes in, and I saw him say, "Good evening, family." That's my mentor. He's one of the co-owners of Lit Television Network. So our show will also be on my channel. I have to send it over to be on my channel. So, and my show is called, my channel is Unveiled TV on the Lit Television Network. Lit stands for Leveraging Information Together.
Nice.
And so everything about this channel, and I want you all to go download it. It's on Roku. It's on Fire Stick. It's on Android TV. It's free out. You pay for Sling. You pay for all of these other things. You pay for Star, but this is free. And again, there is so much free information that is out there that you do have people that look like us trying to bring information to us. But will we patronize it? Will we patronize it? We need to. Okay? So, yes, this show is going to the masses. So you may be getting calls from, we have a big audience in Atlanta. We have a big audience even all in Africa. You know, so it reaches places. Social media don't reach everywhere because everybody's not on social media. Right. You know, so we want to our platforms to be illuminated wherever we can get it illuminated. Okay. So again, thank you so much for gracing my audience with your presence. Listen, this conversation has been a great conversation, and we're going to continue to build on it.
Awesome.
Okay?
I love it. Thank you. Thank you again.
I'll share the flyer with your information on it again. Y'all contact him, get pre-approved, and then come and let me see your house, okay?
Let's do it. Let's make it happen.
I call him however it goes. Guess what? We're going to work it out, okay?
Let's do it.
All right. Thank you all so much for tuning in to this week's episode of Unveiled, the Chrissy Shorter-Arnold show. This has been an amazing show. We're talking about real estate, trying to educate you all. I pray that we said something that will resonate with you and that will stick with you and that will generate questions that need to be answered, okay? And that it will light a fire under you so that we do not stay in the poverty mindset, but that we will do things that can be not only beneficial to us, our kids, but our community at large. Thank you again, and I will see you all next week right here on Unveiled, the Chrissy Shorter-Arnold show.